Hey, what's going on, guys? Bot Mentality here. Today I got a video for you talking about some trades I took on Apple this week, how I traded this SPY chop we've been having here over the past couple days, and the concept of trading around a core position, and how to kind of tier into that with different strikes and different expirations. And just really want to share with you kind of how I thought through the trade and how it's going, just so you can see a realistic view of how to react to price action. And this is all recent, so let's just jump into it here. So pretty much, big picture, the SPY, we've seen a huge move up since last month. We've been consolidating here all week for the past couple sessions here near all-time highs, and we were just chopping around, right? The most important thing to realize is that this day right here is the 17th. There was a lot of demand around 388, right? Right here on 388. So if the SPY pulled in towards demand and we saw a beta name like Apple pulling in towards demand, I was looking for the long. Right, so I'm just going to draw this line out here for you, make it a little bit easier. So pretty much to say 388 is that demand, right? So that's what I was watching on the SPY. I always keep an eye on the overall indexes when I'm looking for my plays. Now let's look at the big picture on Apple. What has Apple been up to? Really significant uptrend, right? We had a significant uptrend from this $100 level all the way up over the past couple months. We recently ripped to new all-time highs there to the 145. And we pulled back, saw a bounce here off 130. 130 is a significant area. And we saw resistance here around 138. So I'll zoom in some more. My overall thoughts here on Apple was we were seeing resistance at 138, and it slowly started selling off here as SPY consolidated horizontally. Apple was bearishly diverging and slowly selling off. So what I was looking for was an acceleration to the downside to get long, and I was watching the 130 level. And if you zoom out here, you'll see the 127 demand here. We had a pivot here, 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 here. I'll zoom in some more. These pivots and then this pivot over here. So that 127 was a significant demand level I was looking towards, and we got that opportunity this week. So I was looking for Apple to accelerate, but I wasn't going to buy Apple until the SPY also got near that demand, right? That 388 demand. Because if SPY wasn't at that 388 demand and Apple was all the way down at 127, when SPY did hit 388, Apple could have been at like 120, 123, 122 or something like that. So you always want to pay attention to, where is the overall market at and what is it doing and where is it support historically, and compare that to the beta name or the tech name or whatever stock you're looking at, right? That has a correlation with the SPY. It's very important. So just jumping into the actual trade here, I'll just zoom in some more. I'll go to the hourly chart. Let's see here. And I'll zoom in here. And I'll go to the hourly and just zoom into this week. So here's what we saw. This day right here is the 16th. The day before, I saw this gap up on Apple, huge rollover down towards the close. I'll jump over here. You see the 16th. We had a huge gap up on the SPY, and then we rolled over into the close, right? So now I'm interested, okay? So I know if the SPY takes another leg down, we can get close to that 388. So now I'm looking to play the long side. So we get the huge rollover on the 16th. Apple gaps down, opens up, huge flush down here into 130. As you remember, 130 was my first support level I was watching for the long. So I went ahead and jumped into my first trade, and I'll pull it up here for you. I got 20 of the Apple 150 calls at $1.43 each, and I got them for April 16th. So this is a 60 days roughly till expiration option. And I bought it when the stock was at 129.80. So what I saw was on this day, and I'll go to the 5-day, 15-minute. I saw here on the 17th, I saw Apple open up, and I'll get rid of these. These are just random alerts I threw up. I saw it opened up, pulled back. We pulled here into this 130, right, broke it, and then when I saw it start to reclaim, I got long there at about 129.80, right here on these lows. So almost bottom ticked the day, right? And then we continued to the upside, so that was looking good. The reason why I got 60 days on these is because I knew it might take a little bit of time. Like I said, SPY's been chopping around this level for a while. It might take a little bit of time to get this upside move. One other thing I wanted to point out, one of the reasons why I was interested in longing Apple was not just because of it pulled back into that technical demand, but also the options flow over the past 2 weeks from the 8th to today, right? Apple led the flow leaderboards for 3 days this week. So on this week, Apple was high on the flow. So if you don't know about sweeps, I made a video on that previously. You can just watch that down below. But pretty much when you get a sweep, it is a massive options order, right? That has the potential to affect the stock price. Let me just leave it right there, right? And I have this software called Flow Algo that tracks those. But you can see over the 2 week period, there were 53,000 put flows that showed up on the the software, right? And 219,000 call flows. So you can see there was a heavy bull side bias in the options flow, and I took that in consideration with the long. So when I got this pullback to 130 here on the 17th on Apple, and it bounced, I got long, right? Well, as you can see, the market gapped down again. We pulled back further. Why did we do that? Well, look over here. We didn't hit demand on the SPY yet, right? We only hit 389. So it pulled back up, pulled back again, and pulled right into that 388. So you know exactly what I was looking for. I had told my room a couple days before I took this trade, I was watching the 130 and 126, 127 demand area over and over. As this trade approached, I was calling that demand area out. We finally got this pullback here on Apple down through 130, 129, and a dump here into 127.41. I ended up getting long right around a little below 128. So I didn't get to nail the bottom, but on the 15-minute time frame, I got really close. So I got long here, and what I did was I took a different strike. Okay, so I loaded 15 of the Apple 135 calls. Before I had the 150s, I got the 135s this time for $2.05 each, and I got them for 30 days. I didn't know how quickly we were going to bounce, but I knew that I liked the demand zone. I liked the options flow that was coming in, so I wanted to go ahead and take the long, and I got long at 127.80. So yeah, it was right up, right in here, right where I was saying, right in here. So I took this trade. So remember, I had a first entry up here, pulled down, so these contracts are in the red. Got a second entry here, right? Well, as you can see, we pulled into the demand the same day the SPY pulled into demand, right? Here on the 18th, we got a huge pop run up into the close. So I'm very green on these contracts, and these contracts are still a little bit red, right? And a huge move up on the SPY off that demand, which makes sense. You want to buy in those demand areas. We got a gap up here on Apple, and on this push up here to that 130, 0.5s, I end up selling my short-term expiration. So I sold these contracts, the 135s, and I kept the 150s for 60 days. So I sold these, right? So these contracts covered the entire unrealized loss on these contracts, even though I had a lot more here, right? So let me just jump over to the options, to the rest of the information I have here, right? So I sold these at 243 on the bounce over 130s today, right, up here. And you can see I had the 30 days, right? But it happened the next day. That bounce happened the next day because SPY was on demand, Apple was on demand. And so scrolling down, the total profit on those contracts, those 135s I sold, was $570 there, pretty much overnight. And what I want to talk about here is the difference between trading around a core and holding and ignoring opportunity, right? So I still have these contracts, right? They're still at a loss. I still have these contracts. But I picked up the 135s here. If I wouldn't have picked up the 135s here, I would just be holding these contracts red until we saw a more significant move on Apple to the upside, right? That's why I bought them with so much time. So we had time to make that upside move. Because I still do like the bullish setup. But I missed out on a better opportunity. So if I liked Apple at 130 at this demand level, why would I not like it at 127? Especially if we're seeing the SPY bounce and we're seeing Apple, that call side flow coming in. Wouldn't I like that risk reward to take that? I took a shorter term strike because I wanted to see a more significant move in the options if we did get that short term bounce, so I can start taking some of those off and just taking some profits and paying myself to hold these contracts here. And you can do that. So we pop back up. If Apple comes down again towards 127 again, I'll be looking for the long again, still holding these contracts in case we get the move up, 131, 132, still holding these contracts. But on these 135s, I took profits here, right? And if I had held them until here, I probably would have been down, 50%. I probably would have only been up a couple $100, right? Versus the 500 I made up here, right? So if we do end up coming down and you do see SPY come back down to this 388, 387 support area, I'll be looking to get long Apple again, and then trading the volatility along the way. So the point is that just because you take a trade here and the market doesn't do exactly what you expected, as long as your trade thesis isn't invalidated, it can be a good idea to look for another way to capitalize on the opportunity. Because the reality is, if I would have checked the market and on this day, the 17th, we weren't at 130 and I checked and we were at 127, I would have took the same trade, right? I would have took the same long side trade. So, you can use different expirations to kind of help you pay for trades as you go along. Try not to get too deep into it, but I wanted to talk a little bit about how to manage positions in the options. So I'm in a really good spot. I made that $570 here. That cushions it. So if we see a move back down to 127, I made that money. That helps cushion the amount I'd be down on this initial contracts, and I can go ahead and scoop some more. And if not, then I still got these, and we're good to continue on. So that's pretty much it, guys. That's all I really wanted to talk about. So I talked about how you can use the SPY and look for demand zones, correlate that with areas of support on beta, and when those line up, you get a high probability setup for your trade. It goes both ways, guys, on the call side and the put side. And then I talked about options flow and how important that is. If you notice, a lot of people are leaning into the calls, into demand. It could be a pretty good sign that there's a lot of people looking bullish, or a lot of people looking bearish, depending on if we're looking at calls or puts. So flow algo is a very important indicator. If you guys are interested in joining my Discord, I have information about that in the description below. You can shoot me an email if you'd like. This software, flow algo, that I use, it costs $150 a month, and you join the chat room and you just get that for free with everything. And so it's a pretty good advantage for you to have that and to be able to see the option flow as it comes in. But that's pretty much all I got, guys. I'm about to go enjoy my Friday. Continue to stay focused on developing that bot mentality, which is the trading mentality, where you learn to control your emotions so you can trade like a machine, guys. I'm out of here. Deuces.